Good afternoon, everyone. I hope you're doing fantastic. In this video, what I'm going to talk about is whether or not you need a business plan when starting a staffing agency. So, most of the times, when you actually have a written business plan, the reason you have one is to actually get a startup loan from a bank. So, a bank or financial institute that's going to lend you money actually want to see a written plan with a financial forecast, what you do as a business, and your business plan for maybe the first quarter, second, third, and then the first, second, third year. In order for you to qualify for a loan or a startup capital of some sort, you're going to have some sort of plan. Now, they won't actually look at you or consider your application unless you have that. So 9 times out of 10, most people that actually make a business plan only make it for the banks, really, and they don't actually do it for themselves. So it's, you're giving the illusion of, look, I want to impress these people, or I want to look at, a bank as a whole and impress them to get them loan. So what most people forget to consider is actually the industry that they actually in terms of their expertise. So if you're looking at setting up a staffing agency or a recruitment agency as a whole, you need a plan that's industry specific to yourself. Now, that doesn't make much sense, but in terms of what I'm trying to get at is you need to reverse engineer everything. And there's three components that are important. Number one is the financial element. How much do you want to earn? How much are you going to spend? How much are you going to invest? So necessarily thinking you need a business plan, oh, I want to make X amount of money. That's not good enough in terms of what you need to cover for your business plan. It doesn't have to be written, it does help. Now, the second part in terms of what you're going to do is how you're going to execute it in terms of what you have to do to achieve those goals. Third is obviously the growth element, which may or may not be as important at this stage. So I would definitely home in on the financial element. So how much is it going to cost to actually start up? So if you're looking to set up the agency, what you need to consider is number one, how much do I need? What do I need to buy? And what is my running cost? So your average running cost of a new startup agency is very minimal. So you have to pay for your website, which may cost $100, anything up to $1,000 or a few hundred quid off of that. So going back to that, there's also the email element. Now, you don't need specific software. You're probably not going to buy subscriptions to job boards, but you may want to allocate some cash per month in order for you to, I don't know, buy a few job adverts here and there. So in terms of running cost, you're looking at maybe $30-40 per month. So it's not too much. The main cost is going to be the email hosting or the email server and also the website hosting. So it is key in terms of what you're looking at for a very minimal startup running cost. Now, if you went to the bank and you said, look, this is how much it's going to cost me, they'll say, why do you need the loan? Now, if you're setting up a really advanced agency where you're buying job board subscriptions, you're buying an office space, obviously then you may need a loan. But what I suggest is obviously start a very lean business at the start. Now, moving on from the sort of projections and financial, that's totally up to you. How much you want to earn is your sort of goal. So if you're earning, I don't know, $30,000, $40,000 per year, you specifically want to at least hit just slightly 10% above that. And that's the sort of minimum you want to be aiming for, because there will be good and bad months. It's not a consistent income when you actually run a staffing agency. So in terms of what you're going to be looking at is you want to reverse engineer it. And this is the important part. This is the part that comes in where you actually think, all right, great, I need to earn this much. So you need to look at what type of jobs are you going to be recruiting for. So planning wise, you may say, I'm going to charge 10% for a direct hire or for a permanent placement, and it's going to cost, each client maybe $5,000 because the salary is 50,000. So let's say you're looking at sales managers and their salaries are $50,000 per year. You're going to charge 10%, you get £5,000 or $5,000, sorry, up front. Now that's your sort of cost. So how much of that do you have to make in order for you to earn $50,000 per year? Obviously 10 placements, that equals to one per month. Great. So how many clients are you going to need in order to achieve that? Client wise, you're looking at fill rate. So fill rate is an important element that you need to measure, and it's one of the most overlooked things in terms of KPIs for recruitment agencies. So a fill rate is how many jobs you get, how quickly you fill them, which is the time to fill rate, and also the ratio of how many successful placements you have per job. So I'll give you an example. If you had 10 positions you're recruiting for and you end up filling, and that's for, you know, month one, you end up with 10 positions and you end up filling 2 of them, your fill rate is 1 in 5 because you filled, you know, 20% if you want. So in order for you to get 1 placement per month, you're going to be looking at, if you have a 1 in 5, you're going to need 5 placements for each, 5 jobs for 1 placement. And that is a hard sort of, with new clients, it's typically very difficult to measure because new clients are unproven. You don't know if they're actually going to hire through you. They're not always going to be, you know, receptive. They might go cold, their sort of things. But if you have proven accounts, it's very easy to measure. So from historic data, you can look at, oh great, I've had 60 positions from this client and I filled 10. Great, my fill rate is 1 in 6. So if I get 5 other clients like that, I replicate it, and that's what I have to do. This is the important part, why I always mention to people that you can't rely on one client. It's the number one thing that bankrupts staffing agencies, recruitment agencies across the world. Everything will go well. They could be, I mean, it's typically a very large account, so they could be making $1 million per year and they've got 4 staff and they've got a few other small accounts. Now what typically happens is they put all their eggs in one basket. They hire staff to manage those accounts. They hire compliance people, and suddenly, for whatever reason, that account goes very quiet. They stop, the revenue stops, the tap runs dry, and they can't actually win any more business quick enough to sustain their overheads at the moment. Even if they weren't making a massive profit, chances are your recruitment agency will be, you know, a lot of staff will be made redundant. So bringing back to the point of what you sort of need to achieve. So let's say you've set up your agency and you know you have to get 100 job orders per year in order for you to actually sustain that £50,000 per year target, or dollars. So if you look at that and you say, okay, great, one client might give you 3 positions on average, or 5 positions on average for the year. So you're looking at them as accounts, not so much clients that are just going to give you 1 job order and that's it. You need to look at them as accounts as a whole. So going back to that, you may need 20 clients signed up in your first year with 100 job orders in order for you to hit your $50,000 target. Now, a lot of factors will come in. Once you start having some growth and you start having some successful placements, that $50,000 you will allocate some spend. So you may purchase a CRM, you may hire staff, you may actually take a salary for yourself. So these things still have to be factored in. And that's why you can't look at it as a total profit at this stage. You may buy subscriptions to job boards, you may post on Indeed. There is a cost element to it. You may buy Recruiter Lite from LinkedIn. So there's a lot of purchasing. You may buy Octopus, other software, data mining software. You may hire freelancers, whatever it is, that needs to factor in. So if your target is 50,000, I would add a 20-30% on top. So your salary would be 50,000. So what you do is you just increase what you sort of relied on, or what you said would be your actual total target. Reason is you want to factor in those costs. So it will be a good idea to work out everything now. So what am I going to need in the future? I'm going to need job boards. I'm going to need possibly a CRM. Factor those costs in and add that on top of your yearly target for your first year. Your second year, I've never seen anyone not increase their second year. You gain from experience, you win more clients, you work out which clients are good, and it brings you a recurring systemized income process where you don't actually have to think, oh great, what am I going to do? How am I going to pick up clients? Really and truly, your first 3 to 6 months should be the time where you're actually picking up clients, rather than, you know, trying to fill positions. Once you've got those accounts and you built those relationships and you know the deal, you know what the client wants, and you can service those accounts well, that is when you really take off and you start to actually make money. In your first few months, it's just a learning curve. So business plan, you do need one. Doesn't have to be written unless you're looking to satisfy the bank or financial institute. So I hope this video has been helpful. If you've got any questions, please let me know, and take care.